Welcome, guys. Welcome to the budget series of ICICI Direct. Today we have with us the Chief Economist at ICICI Direct, Mr. PK Basu. Sir, your first reactions on the budget, since it was the last full budget of the government going into the general election next year. What are your thoughts and how do you see it?
Well, I think it's a remarkably comprehensive budget. It does a lot of things at the same time. It provides for very substantial expenditure increases to the rural economy, to the last person, so to speak, the left out parts of the economy and society. It provides substantial support to them. But it also provides a substantial 33% increase in public investment. And in addition, it cuts the personal income tax rates for anybody using the new tax regime. It cuts income tax rates for all personal income taxpayers pretty much across the board. And it simplifies the customs duty structure. But at the same time, it also reduces the fiscal deficit from 6.4% of GDP this year to 5.9% in the next fiscal year, FY24. And I think that those numbers, 6.4 and 5.9, are actually very conservative. Given the strength of government revenue, tax revenue particularly, personal and corporate income tax, as well as GST revenue, I think there's actually considerable scope for the fiscal deficit to be well below those targets. I think, in fact, that the fiscal deficit this fiscal year will be slightly below 6% of GDP, actually close to that 5.9% number that we have for next year. That'll be hit this year. And next year, we could, for next year, the deficit will probably come down to about 5.5% of GDP. So the point is that this is a fiscally prudent budget, and yet it is growth-oriented. That is a remarkable balancing act, but the finance minister's pulled it off, mainly because of the buoyancy of tax revenue, both the current fiscal year as well as the last fiscal year. We've had 2 consecutive years of considerable buoyancy in tax revenue, and that gives the finance minister a lot of headroom. She's used that headroom in a number of interesting, creative ways. Also, boosted things like there's a 64% increase in the Prime Minister's Awas Yojana, so the public housing scheme, both rural and urban. So that receives a 64% increase in allocation. Then there is, of course, the capital investment budget for the public for the government is up 33%. So pretty much across the board, this is a budget that will benefit the economy hugely, while remaining fiscally prudent and lowering the fiscal deficit. So it's I'd say the other worthwhile point to make is that there isn't much that is populist in the budget. There are benefits that are spread around to all sectors of society, but no so-called freebies or no enhanced freebies. Of course, there is a free food grain scheme that has been in place since COVID. It probably is no longer really required, but if there is a populist scheme, that's the one that remains. That will be continuing for the current fiscal year. But that's not a new announcement in the budget. Most of that is already announced. Until December of this year, it was going to continue. I presume the language of the Prime Minister of the Finance Minister's speech suggests that it will continue until next March. So, this is a little bit. That's the only populist scheme one can think of. Otherwise, this is a fiscally prudent budget that is also growth-oriented. That's an absolutely remarkable balancing act.
And for the government going into a major election next year, And this year we have three important states coming up and the general election next time. Job creation, because job has been the main talking point in the previous 2 years. So do you see this budget helping the job market of India?
Well, yes, I think the job market will definitely benefit. If you have a strong pickup in investment spending, including in infrastructure spending, that provides a boost to the construction sector. The PM Awas Yojana, of course, is a direct boost to the construction sector. So construction is extremely employment intensive, and that will generate a lot of jobs. But I think really the focus continues to be on trying to boost export-oriented manufacturing. A lot of that is in the electronics and related sectors, the production of mobile phones, etc. There's TV production receives substantial customs duty cuts. So all of this, as well as the PLI scheme, which predates this budget, all of that is focused on boosting the manufacturing sector, and of course, manufacturing will create a lot of jobs. If there is something missing, it is any really specific measures to provide a boost to textiles, garments, leather products, toys, consumer electronics, and food processing. Those are the classical labor-intensive manufacturing sectors. Many of them are receiving PLI benefits, but there's nothing additional in the budget that is of significance to this area. And I think that is an area that needs continued focus, because that is the one that will generate very substantial job growth, and actually also help to pull some surplus labor away from agriculture into much higher productivity jobs in manufacturing. So, that's the only mild sort of criticism. But broadly speaking, this will be an employment-generative budget. It'll be significantly growth-oriented, and if you generate good growth, you automatically get better revenues, and better revenues contribute to reducing the fiscal deficit.
Absolutely. So this year we also saw the highest capital outlay for the railway as well, right? 2.4 lakh crore was given out for the railway side as well. It was shelled out for the railway. Yeah. And I think Urban Infrastructure Development Fund has been established by the government this year. So it looks like they are now focusing on tier 2, and tier 3 cities as well. And with something on the municipal side, some bonds with regards to municipality and improving the entire urban infrastructure as well. These were few announcements which I had seen myself. Sir, if you see the focus on healthcare, if you see, so what is your take on the healthcare side which the government has announced in the budget?
Well, yes, healthcare has received increasing allocations over the last 3 or 4 years, especially in the wake of the COVID pandemic. And one of the striking things is that 157 new nursing colleges are to be established. So clearly, healthcare is a growth sector in India. It is, as the population begins to age, healthcare will become of increasing importance. But India is also a destination for health tourism, and that segment continues to receive a lot of attention. There's also, of course, over the last 2 or 3 years, been the Ayushman Bharat scheme that is providing almost universal, potentially universal healthcare to health insurance to all citizens. So healthcare definitely continues to receive a lot of focus. Also, I'd stress on the agriculture sector. There's an increase in allocation for priority lending to the agriculture sector. Now, the government cannot directly influence that, but to the extent that the government owns the public sector banks, it can induce them to move in that direction. But there's been a big increase in the target for rural credit growth. Also, there are a bunch of things done to accelerate entrepreneurship in the agriculture sector, and a number of technology initiatives to help digitize the rural economy and improve logistics via the use of technology. So a lot has been done, I think, on the agriculture side in this budget. So it really caters to a number of different important constituencies in the economy, and yet reduces the deficit. So really, not too much one can criticize in this excellent budget.
One more side was the MSME side. They've given free credit to the MSME sectors as well. And I think some 9,000 crores has been given up to revamp the credit guarantee scheme for the MSME sector.
So yes, this ECLGS scheme for MSMEs was highlighted in the economic survey as well as being an important success story of the government. And it has helped MSMEs tide over the downturn. And in fact, a very large proportion of MSMEs have taken advantage of that scheme. So we've seen, this budget provides additional support to the MSMEs and in the form of credit guarantees. So that will definitely be of great benefit to that sector and help to accelerate the recovery across MSMEs in the country.
And like the government and the chief economic advisor claim that we have actually moved out of the COVID crisis, like whatever growth, we are back on the pre-COVID levels now. So going ahead, the government has given a benchmark of 7% growth. So do you see that can we in coming years actually move above 8% or a 9%? I know it's a very hypothetical question to you at this stage, but with this budget and the groundwork that we have done, do you see this India surpassing that mark?
Well, the 7% is the official estimate for the current fiscal year. For the next fiscal year, the government is essentially saying that growth will be around 6.5% for real GDP, with a range of 6.1 to 6.8. But officially, 6.5 is really the target that they've penciled in. In the next fiscal year, current calendar year, next fiscal year, is a pretty tough year for the global economy. If you look at the WTO and UNCTAD's estimates for global trade volume growth, they're looking at just 1% growth in global trade volumes in the current calendar year. That is a serious recession. If you have just 1% growth in global trade, it's very difficult for exports to do particularly well. So in the absence of export growth or only very modest export growth, it becomes a little difficult to generate rapid real GDP growth. And so that, I think, is the key constraint. And that's the reason why India has a relatively conservative estimate of 6.5% real GDP growth in FY24. But if services exports continue to do well, what has happened is that India has a mix of goods and services exports, and both are now in excess of $400 billion a year. So in a year like this, when goods exports are not expected to do very well, if services can take the baton, as they have in the last 6 months, the last 3 or 4 months, export growth vanished. Over the last 6 months, export growth has been very modest. The previous 18 months, export growth, merchandise, goods export growth in India was spectacular. So we've now had 6 months of a slowdown. But during that slowdown, services exports have boomed. They've grown more than 25% year on year. So if that continues, then even the external sector will not be quite as bad as it is for many goods export-driven economies in Asia. So China, for instance, doesn't have this nice mix of goods and services exports. They're dependent primarily on goods exports. Same really applies for Korea and Indonesia, most other countries in Asia. By contrast, India has this offsetting factor. Services will provide a boost, and in addition, if domestic demand, if this pickup in public investment, which is now more or less guaranteed for the second consecutive year, with another 33% increase by the central government, if that can be complemented by private investment also strengthening, then we could get better growth. But yes, I mean, I think that growth will be closer to 7% in FY24, but 8 to 9% is possible in the medium term. We need the world economy to begin to recover. We need a global backdrop that has good global trade volume growth, and in that scenario, yes, 8 to 9% growth is definitely sustainable 2 to 3 years down the road.
Okay. So before going, I'll just ask one thing. So we have viewers who actively invest in the market, and if somebody has to focus on one or two sectors or areas for looking for a long-term investment plan ahead, so what would be your two key areas one can look at?
So I would be looking at the capital goods sector and sort of machinery manufacturers, etc., as one beneficiary of the public investment and consequent private investment pickup that we're likely to see. So that is one obvious area. I expect that towards the second half of the upcoming fiscal year, we're going to see interest rates coming down, because India's inflation rate is going to be moderating. So with inflation coming down, the rate sensitive sectors are another area to look at. Real estate, property, etc., has been down in the dumps for a while, but with interest rates about to start coming down, I think it's worth looking at that, particularly as the construction sector looks set to benefit from things like the pickup in the PM Awas Yojana. Okay.
So I think this is pretty clear, and thank you so much, sir, for taking time, because I know that you had been with the news channel since morning and coming at a very short notice and giving us a bite on the first reaction of budget. Thank you so much, sir. It was a pleasure hosting you.
Thanks, Gaurav. Thank you.